One stock that I've been buying more lately is Abbvie, ticker ABBV. So today we're going to take a look at whether Abbvie is a good buy right now, whether it's undervalued, overvalued, or fairly valued. If you haven't seen my previous stock analysis videos, I like to break this down into 3 different parts. The first one, we're just looking at their revenue, net income, and free cash flow, just trying to gauge whether the business is growing or not. And then for the second part of the video, we're going to look at some of their different valuation metrics or financial metrics. And then finally, we're going to take a look at my valuation model, as well as simply Wall Street's. We're going to average that out and try to find an intrinsic value to see if I'm buying the stock on a discount right now or not. So let's jump into it. So starting out with Abbvie's revenue, that's been very consistent, but it has seen quite a bit of a slowdown since 2020, and it recently has had a decrease in quarterly revenue. So that's definitely something you want to keep an eye out on before investing in this company. You don't want that revenue shrinking over time, but that's just one metric. So let's take a look at their profit. Looking at their net income, that's been kind of all over the place the past 5 years, but they did see steady growth from 2020 all the way up to September 2022. But the main financial metric I think that really shines for Abbvie is their free cash flow. Now, as you can see here, very consistent the past 5 years. You really cannot get a better chart than this when you're looking at free cash flow. Now, moving into their valuation and their financial metrics, their PE right now is at 33, which is definitely on the higher end for them. Same thing with their price to sales. It's about 4.5, which that's on the higher end for them, but in general, a price to sales of 4.5, I feel like is not super high, not super low either, just kind of in the middle there. So, and then taking a look at their net profit margin, that's at 13%, which that's pretty solid. That means for every $1 billion in revenue that they make, the company's taking home about $130 million in profit. So pretty solid overall. And then their ROE is at 49%. That's phenomenal. That's really good. And their ROA is at 5%, which that's pretty decent. I'd say that's kind of down the middle there. They also have a dividend yield of 4.1% and a 5-year dividend growth rate of 12.3%. So that's one reason I really like this company, is because they have a slightly higher dividend yield. They've been growing the dividend very consistently, and that dividend growth rate's pretty high. As well as the payout ratio, I feel like is not super high either. So I don't have to, stress about the dividend. And then moving on to the third part of the video, which is the valuation model. I'm using a DCF model for this calculation. Simply Wall Street also uses a DCF model, so I like to use them as a point of reference. So with that being said, after running my model, I believe the stock intrinsically should be around $250 a share, while Simply Wall Street thinks Abbvie should be around $259. So if you average those two numbers out, then we get an intrinsic value of $255 a share, or 81% higher than their current price, which is around $141. Now, one thing you need to consider before just interpreting this at face value and being like, boom, I'm definitely going to get a great return on this, is that DCF models only look at free cash flow. Like I said at the beginning of the video, the revenue and the net income are a little bit dicey, so just be aware of that. And so because Abbvie has really good free cash flow, these models tend to favor it. But overall, with that being said, I do think Abbvie is undervalued. Now, do I think it's 81% undervalued? Do I really think it has that much upside? Probably not, but I do think that this is really good reassurance that, when the DCF model spits out a really high number, if it has 81% upside and I assume it has 20 or 30, I feel like that's not a crazy assumption. You know what I mean? So that's kind of my take on that. So based on all the financials, the valuation metrics, and everything when looking at Abbvie, I believe they are a buy right now, which is why I'm buying them. Now, that's just my personal opinion. That's not financial advice, but overall, if you're a dividend growth investor and you're looking to grow your income long term, I feel like this is a really good stock for that. As long as they keep those fundamentals really consistent, the free cash flow stays growing. If they can get that revenue back up, I think they'll be looking really good long term. So I'm going to be buying. What are your guys' thoughts on Abbvie? Comment down below. I hope you guys enjoyed this video. If you did, drop a like down below, hit that subscribe button. I'll see you in the next one. Peace.